Greetings traders, this is Houston Trong from thetradingedge.org, and here is your weekly market outlook for March the 22nd to the 26th, 2021. So first and foremost, hope you had a good trading week, and in this week's video, I'm going to speak about the week that was. We'll analyze some of that price action, and then spend the bulk of our time looking at those charts and sort of sorting through the tea leaves to decide or to determine perhaps where we go next. There's only a week and a half left of trading left in this month, and then we get that pivotal new quarter. So unless something drastic happens in the next week and a half of trading, it'll be difficult right now for there to be a regime change just based on how much time is left in the current month, in the current quarter. So for the most part, we're probably going to be coasting here to the end of the quarter. As I've mentioned, in the past, if you understand time frame alignment and you understand what that looks like, the beginning of the quarter, of any quarter, is the best chance for buyers or bears or buyers or sellers to take control of the buying or selling. So because we still have a week and a half away from that new quarter, it'll be very difficult in this case for the sellers to step up and really cause any major damage to the indices. So at this point, even though we're having some volatility in the markets, although you wouldn't be able to tell that if you looked at the VIX right now, the buyers, even though we had a red week for the most part for the indices, it's still a very, very bullish market. Hard to get aggressively short here now, given the higher time frame charts. So let's talk about the week that was. We'll jump into the charts now, and then let's go from there. So as we always do, we begin with the VIX chart. Why is that? Well, this week we finally hit that pivot, that 1315 level that I've been looking for since June of last year. If you recall, and I've been putting this chart up every single time I do these videos. This is the first chart I show, the outside inside. The question was, when are we going to take out that 1315 area? We finally did it this week, right? So it took a long time, outside inside, down down down. We finally took it out, and as I've been saying, if you can keep your eye on the bigger picture, you'll know that the trend is to the downside on the VIX. That means you need to remain long equities. Now at this point in time, we've taken out the lows, and the VIX, the VXX specifically, again, this is the ETN, not the VIX product, not the VIX index, but the VXX is going into historical lows. Now of course the VIX will basically go to zero until they reverse split it. By this point here now, you're going to lows, and there's no easy targets left to go after. So this becomes very, very tricky now, because you're at a place now where the sellers, you have to just keep on selling this thing. Otherwise, we could get a snapback. It's one of those things now where you can think of the VIX like an insurance policy, right? Now, this is not something I'm going to be doing, but something I'll be watching. If you think about insurance, you want to buy insurance when it's cheap. You don't want to buy insurance when your houses are already on fire, right? So you can't really buy insurance when your house is on fire for the most part, because they won't insure it. And number two, you're probably gonna have to pay a lot, probably more than what the house is worth if the house is already on fire. So at this point here, if you have a very long portfolio, it may not be a bad idea to buy some cheap insurance here in maybe some longer dated VIX calls in the event that we spike up here, because if the sellers cannot keep pushing it down, we will definitely get a snapback here, and it may not be a snapback back to the 40s or the 50s or 60s, but certainly you could get a 10%, 20% move very quickly in the VIX, because there's no more levels down here, and you're dependent on the momentum of sellers to keep things going. And what we know usually is that eventually things the selling runs out of strength, and you will get those quick pops up on the VIX, and you won't know the cause for it until it's already baked in the charts. So again, not financial advice here to go off and buy VIX calls, but at a certain point here, this is what you need to be on the lookout for, is for quick snapbacks, which will cause a bit of disruptions in the equities markets. But right now, just pure trend following, if you're not worried about the wiggles of the day-to-day markets, then this is what you want to watch for. You got the Momo down on the monthly chart, Momo down down, and until you can get that high taken out, so this high, this high actually, because we're still in the month of March. But I'm gonna, until you can get that high taken out, that's not a reversal on the VIX monthly chart. Is this going to happen this month? No, that's what I'm saying. It's going to be very difficult for the bears to step up here and change the composition of the charts. You'd have to go all the way up here to create a reversal, right? That's last month's high. That's why I was saying in the new month, in April, in the new quarter, if the sellers run out of steam and somehow the buyers step up and they take out that pivot high, that's the kind of reversal that's going to signal to you that, whoa, you need to watch out here. But for now, that's the, this is the pivot you're looking at. That's really far away, right? So this is a draw. I'll just show you how far. So we closed here. You'd have to run 66% to the upside. Again, not impossible. VIX has done crazier stuff in the past, but I'm going to say it's very unlikely that's going to happen with a week and a half left of trading in the month of March. So to the weekly chart now. We got the Momo down on the weekly chart, monthly chart, and the weekly chart is outside, inside, and down, down. We've been on top of this trade, for a while now. For the last couple of weeks, we've been watching that pattern play out, and you do have to watch out for that intra-bar volatility. So even though it's closing right on the week, as you know, if you trade these markets intra-week, it seems volatile if you're only looking at the daily charts or the intraday charts. But the longer time frame charts is that it's going into lows. Here's a red flag though, right? So there's that 1315 area, that red line, and now we hit that bottom of that Bollinger Band. A little dicey, right? So here, once you break down into a Bollinger Band, you have to keep going. If not, if this coming week, all of a sudden we pop up above this past week's high, so that pivot right there, the week's high was 1402. You got to watch out for that, right? So you might see, if you break above there, you might see some short covering, some longs entering in here to play a bounce maybe up to that quarterly open level, 1680-ish area. Okay, we still got that 1630 area, which has been resistance for a while. That's another level I'll be watching very carefully if the buyers can somehow break above that. And again, not predicting this, just saying this is how I'll be responding to price. I'm going to draw out this box even further here and to stretch it out over time. We break above there, that's something you want to watch out for, because that would be a change in the composition of the markets. But for now, just following the trends here. That's what we do in these in these videos. We're looking at potential more short-term weakness in the VIX, but again, if the buyers do step up here are the levels we're watching for. So right now, look, intra-week, it was basically Momo down until we hit the Fed day. We actually had an outside bar. Thursday popped up, right? Up 5%, 5.5%. And Friday they faded it again. So it popped up slightly, but then they faded it for most of the day. It was one of those days there on Friday where the SPY closed the day slightly red, and the VIX was also red on the day. So one of those rare days. You can't overweight Friday, even Thursday, Friday, because the markets, we had quad witching this past week, and that tends to create more volume on the charts as traders who trade the futures, single stock futures, as well as stock options have to basically close out their expiring options. So that's options and futures. So that's why we had a lot of equity names and indices pinned to certain strikes, and that's where we ended off. I'll show you the indices in a few moments here, but that's where we ended off. So Momo up, right, on the VIX. If we break below here, coming on Monday, and that's a Momo up reversal short back to the downside again. So very easily now we can come back down here and sink lower and get new lows on the VXX. Now the sellers really need to keep going here. But if we take a look at, let's take a look at this here. I'll look at the VIX chart itself. The VIX chart itself is the VIX index. Okay, so you can see here that I'll look at, on this is a little messier because this is what the VIX actually looks like, not the VXX ETN. But we did hit a recent low here, right? So the low here was 1895. We haven't been that low. Look, you have to go back quite a ways. 1895, right? Way back in February. That's right, of February of 2020. So this is before people started to panic about the coronavirus. We're getting back into that regime. We had a gap down here, close of 1556, way back in Feb here, and that's when things obviously went haywire to the upside on the VIX product when risks started getting repriced based on that pandemic news. So we're getting back into this low volatility environment again, getting back to the 15 areas. Let's see if we can get back down here. Right here is 1839. So yeah, we're getting right back to where we were back in February of 2020. Okay. So let's move on now. Let's talk about SPY. And SPY, for the most part, is still hanging in there. So we've had, I think, 5 consecutive up months now on the SPY. So this thing is going, it's creating fresh higher highs. And if the sellers really want to step up here, they'd have to break below that quarterly open, which has acted as support, and below the prior month's low to create a reversal on the chart. No indication that's happening right now. So SPY still making those higher highs. On that weekly, we did get a red candle this week, but you did create a higher high in the beginning of the week. So for now, you cannot call a reversal on that. But if you turn this coming week's, take out this past week's low, if you can reverse this week's low and kind of break below it, then there's a possibility here that you come back into the range here, and that would just put you above the quarterly open here. So still a lot of work for the sellers to do. So even if you do break down here, it'll still be a green quarter, right? So even if selling does pop up here, for the rest of the month, it'll be difficult for the sellers to really wrest control given what we know about the charts. All right, and on the daily chart, let's go to the 2-day first. The 2-day chart, we end the week with a Momo down scenario. So SPY going Momo down. What we know about Momo down is if we take out this high here on Monday or Tuesday, right, that could be a Momo down reversal back to the upside again, and we may get, again, fresh all-time highs. So that's not out of the picture. That's kind of the direction I'm leaning right now. But as you can see, we opened. This is a scenario I'm always watching, right? Where are we trading in relation to the significant opens? The weekly open, the monthly open, and the quarterly open. The quarterly open is not on this chart here. It's on the daily chart. I'll show you now. Okay, so where are we trading in relation to those opens? And this past week, this is always the issue, is that if you open up high, all right, so we had a situation we basically gapped up on Monday. We ran up until Tuesday. Here's the FOMC meeting on Wednesday. People took profits here going into FOMC, right? So people took profits. You saw some selling, and then on FOMC Wednesday, we had that big outside day. Well, big being relative. We had a good outside day, and it looked like we were going to keep rallying. This is an outside bar. It's always suspect when you have the outside bars that can easily go either way when you get that outside bar, right? When you see a bar like that, if you don't understand outside bars, your first inclination like, well, that's a pretty bullish bar, isn't it? It's engulfing, a bullish engulfing bar. To me, that's not significant, right? If you watch enough of these videos, we understand outside bars very, very well and what can transpire after an outside bar. Because as bullish as that candle is right there, that outside bar, what negates that? That, right? All you need is to have a red bar after an outside bar, green or red or otherwise, and that turns into a Momo down scenario. That's what we had on Thursday, with the Momo continuing on Friday. Friday, we tested that 20 period moving average, that's the green line, and we basically ended the week with a mixed time frame scenario where you're red on the week but green on the month, green on the quarter. So this is a situation now where you don't want to get aggressively short on the indices, especially the SPY, because you have that mixed time frame alignment. It doesn't pay to try to be the first one out of the gate to try to short. Yes, you can make some quick money here to the downside, but for me, these trades are called profit takers. I mean, you want to be taking profits quickly because it would not take much to evaporate this downside. Given the trajectory and how that angle is steep like that, all it takes is a break above Friday's high to create a Momo down reversal back to the upside again, and you can see how steep that is. Shorts will have to cover right away as soon as you break above there and come back to the range again to take out that pivot high. That's a very, very high probability event there if it happens on Monday or Tuesday, because we're going to have a new week. If we open down here and trade up, you're going to have a green week, a green month, and a green quarter. That's what I call full time frame alignment to the upside. You'd have to give it to the buyers at that point and be long once again. The market's not calling for aggressive shorts yet. Okay. Let's go Qs, because Qs have been weak for a while now, right? So they are certainly the laggard out of all the indices here, and there's good reason for that, right? The story is still around the real interest rates, or around the bond prices heading downwards, which is causing, which is obviously the opposite of what yields are doing. The yields are going up. So right now we have a situation where it looked kind of bearish on the Qs the first couple of weeks of March, but now, as I've spoke about 2 weeks ago, how do you repair a chart like this? Remember, 2 weeks ago, maybe even a week ago, this bar was not a hammer like this. It was actually trading down here, and I said, if the buyer's going to pull it back into the prior month's range, that will look like a hammer like we have here now. And this is not a scenario where you want to get aggressively short. You want to get short if you can break back below the prior month's low. Well, guess what? This actually is possible this coming week. So the Qs is a little different than the SPY here now, where we have an inside weekend up. The buyers had their chance to actually really cause some short covering and perhaps get back to those all-time highs. We have a Momo down here that got extinguished when this bar popped to the upside. We had an inside weekend up. So this is what you want to be looking for. Here's the range, right? If the sellers can take out this week's low, then we have definitely the possibility that we head lower, because there's our orange line. That's our monthly low. If we get an inside buy reversal, that means an inside buy reversal short to the downside, we break below this week's lows, then that puts these levels back into play again, and it turns the month back red with full time frame alignment, right? That'll be a red week if we start trading lower after where, based upon where the week opens. We'll be below the monthly open, below the quarterly open, and once again, you're going to have that bar on the monthly chart back below the prior month's low, creating that reversal. So we still got a week and a half in this month. That is a possibility. So if the buyers though break above this week's high, then people are going to forget that this looks like a inverted hammer. They're going to just forget about that. They're just not going to the people are not going to weight that anymore as a potentially bearish bar, right? If you can break above this past week's high, we'll come back up here again and we'll go back to those all-time highs. However, you break below this low here, and then watch out, you're taking out that pivot and then that pivot, and then perhaps new lows here for the month of March. So Q is slightly different than the rest of the indices here. One to watch for a very, very clear level there, 309.66. Are you trading above that or below that? And they get to see the continuation of this Momo down reversal of the upside, you got to break back above 324.20. Okay, so not all the heavy weighted FANG names are doing that badly. I've been long Facebook for some time now. It's been at least a couple weeks. It's here. 2 weeks, and I took some profits on Facebook this past week. But here's an example of Facebook going close to all-time highs again, right? So we had a inside bar reversal back to the upside again with an outside bar for the month of March. So Facebook repaired their charts a bit. They had a lot of negative news, right? So their continued battle in Australia around their news service, potentially more punitive action against them. But right now the charts are not showing that. So when the people are buying based on bad news, it's showing you the strength of Facebook. So right now Facebook hanging in there for the FANG names. And even something like Google is hanging in there as well. Google is not, even though it's a red month, it has been hanging strong. All right, so it very well could be that Google right now with a Momo up situation is probably going to close the month as a inside bar. That sets up April for something very interesting, right? You have that clear inside bar for March. Let's pretend it closes there for the month of March. Which way does this inside month break in the month of April? That's what you want to be watching for in April. For now, still inside the previous month's range. If it breaks above here, with a week and a half left, breaks above this, February's highs, then you're in a full-on Momo up move still. But for now, likely we're going to stay in that range. Google just be looking very, very choppy sideways trading action. Pure consolidation. Look at the tightness of those Bollinger Bands. That just means you're in a consolidationary period, and that means somewhere on some time frame is going to look like an inside bar, and it does look like an inside bar, right? On the monthly chart, that's an inside bar, right? So all this chop here that you're seeing on the weekly chart, right? All this stuff here, inside bar in the month. That's how you can tell. Let's go on to the Dow now. So Dow. Okay, so Dow here. Looking strong on the month. It'll be very, very difficult for the buyers to turn this thing around. The sellers to take control. You'd have to break below Feb's lows, and that would be very difficult with only a week and a half left. You'd have to have some really bad news show up to basically change this chart around. So for now, that cyclical trade, that kind of reflation trade back into these cyclically strong names, still doing well. So if you look at some of those Dow stocks, lots of them are getting close to the 52-week highs or hitting 52-week highs. So no reason to be short Dow names at this point. This is the stress. This is the sector. This is the indices that's actually performing the best. All right. So for the Dow chart, this is what I'll be looking at here. So this is a little tricky, right? So if you look here, we had a a Bollinger Band walk on the daily chart, and I'm always wary when you start doing the Bollinger Band walk because it has to keep going. And what do we know about the Bollinger Band walk is that it has to keep moving. If it breaks outside the Bollinger Band and you break below the power bar's low, you're going to get a reversal of some magnitude. Again, it depends on the structure of the chart, but we did see that on Thursday, Friday, where, look, this is your Monday, inside bar Tuesday, FOMC Wednesday does an inside bar up, a little higher up on Thursday, but then they fade it, and then we get the reversal on Friday. This move here is a minus 1% move, stops out anyone who bought at the beginning of the week, right? So that's the kind of stuff you need to watch out for when you're going to highs like this, because it doesn't take much for this kind of bar to basically wipe out all your gains. So that's why you have to always be wary when you're going into highs, especially into the Bollinger Bands. That's why you saw the same thing here now with the Dow chart on the weekly chart. You're in the Bollinger Band highs, you got a red candle here now. A little iffy because it will not take much now for this thing to break below this low and for it to come back in. So even though the higher time frame charts are saying it's still trending higher, you can expect some intra-week volatility, perhaps take things back in again, and maybe the buyers step back in to buy that dip and then have that continue to move to the upside. You just don't want to be buying at these highs, as I've been saying in the last few videos, is that you want to avoid, number one, right, trying to call bottoms and tops, but at the same time, number two, you want to avoid buying highs and selling lows. That's always a losing proposition. So people who buy breakouts, that means they're always buying highs, they get stuffed out a lot. And this is a scenario here again where you're buying into highs. This would be very iffy trade location up there. Okay, so Dow, a little bit of a red flag here because you're going into those Bollinger Band highs on the weekly chart, and you're coming off it on the daily chart. Russell, let's talk about that one. And on the Russell chart, we've had basically, look how many consecutive green months we've had now on the Russell. So here, 1, 2, 3, 4, 5, 6 consecutive higher highs, green months on that Russell chart. So that takes us right to the top of that, Browning formation. We're back above that again. Probably going to be, looking like a hammer right now on the month of March. Who knows where we close it? But so far, a strong month for the Russell once again. This thing there here potentially still has range, right? So you can see here now red week, but we did have the higher high in the week. So this high here was higher than this week's high. So we did get a higher high, even though the week closed red. So this coming week, watching for the same ranges again. We're painting our ranges in here. Why do I do this every single week? Well, just because, these levels help us understand whether or not we are trading in a range or outside a range. That means, are you consolidating or is it range expansion? So we're watching to see how price, on what side of those ranges price is transacting. If you're trading inside a range, that means, you're talking mean reversion stuff. You're trading outside of a range, then you're looking for range expansion. That's directional, okay? So there's your Russell chart. And on the daily chart, we did get this move here, the Momo down on the daily chart. So, this is no better example of what to expect when you have mixed time frame alignment. You got a red week, right? See, you open up high, and if you drop back into the range, then you get mixed time frame alignment. Look, it comes all the way back in, and where does it find support? You could say it found support off the 20 period, but actually where you found support was that orange line. What's the orange line? Yes, the monthly open. The level is significant. People are stepping up. They're defending those levels. People are actively watching and trading those levels. So you get a Momo down on the Russell, but you get a green day on the IWM. So you break above this high here, and that's a Momo down reversal back to the upside again, and expect that pivot high to get taken out. Especially if happens on Monday or Tuesday, you break above this high, then you'll have a green week, a green month, and a green quarter once again, and that means you're gonna have to be biased to the upside. For now, again, I'm not shorting these markets. I might short individual names, but in terms of the indices themselves, especially something like the Russell, the Dow, and the SPY, so long as that time frame alignment stays aligned to the upside, I'm not looking for shorts. Now the Qs, as I said, 2 charts ago, you do need to watch out for that inside bar reversal potentially on that weekly chart. That would change things very, very quickly. If that happens, then you need to be watching the indices, the rest of the indices, and see how they respond. Do we get into this sort of mixed divergent market where you may have the Qs underperforming things like the SPY and the Dow? That's certainly possible. We have had that for a number of years now, but going back in the past, if you look back at let's say the 2000s, you had after the tech crash, We had a time where the Dow and the SPY outperformed the Qs. This is, has not been the case the past few years. The Qs have been the place to get that, that beta. If you want upside exposure and you want bigger gains, people have been jumping into those tech names, those growth names. Are we now heading into that environment where perhaps these, the SPY stocks and the Dow stocks outperform the Qs? That's very, very possible. That would be a bit of a regime change, and that means that you have to adjust what you're trading, right? So I see some people, fortunately, if you don't want to get too wedded to the names that you're trading, if you're looking for I think one of the easier ways to trade is to look for names that are actually working well and simply just focus on the things that are working. That means if your stocks that you're trading are no longer in play anymore, then you're not going where the easy money is, right? So my preference is to find things that are trading with things like full time frame alignment that are trending, because then it's then you have the win to your back. If you're playing stocks that are sort of out of favor, then they don't move as much as you think they should, and sometimes it's those markets can be a lot trickier. So stick with the names that are working right now, and that means sometimes being a little bit more selective with which stocks you're playing. So some of these quote unquote more favored stocks that have been very popular to trade the past year, 2 years or so, you might have to update your watch lists to be looking at different names. That's just part of the market cycles. You want to be rotating and basically following the smart money. Okay, let's go TSX. TSX now steadily moving higher. Kind of a small week on the TSX, but the trend is certainly up. Monthly chart, big green month. Still, we've made 1, 2, 3, 4, 5 months of higher highs. Question was, how far can this thing go? Right now, you don't want to try to top pick that one. Weekly chart, small week, small loss. Actually, no, it's basically flat, plus 0.1% on the week. So it ends up as a small red week, but still making higher highs. So TSX, watching for that. We do have the Momo down situation, similar to what we saw there on the Russell. So it would not take much now to break above this high. So this Friday's high to create a Momo down reversal. That takes us back to the all-time highs again on the TSX. Okay. So on the TSX, let's go back to the next one. Let's discuss emerging markets. So this is a market here now that's been flagging as being one that has been underperforming for a little time now. But now look what happened in the past week. We have a situation now where this chart has been repaired, right? We had a shooting star that looked very bearish going into the month of March. I was signaling that last, at the beginning of the month, saying you need to watch out here because this thing is looking like a shooting star. If you get a reversal, meaning you break below that low, you need to watch out. The issue here is that you just can't go short and sell on the lows because you have that quarterly open right there. Is that going to come into play? It did come into play. See the quarterly open? They bounced right off of that. So the buyer stepped up there. You'll see that very clearly on the weekly chart. Let's go back to the weekly here now. You basically found support right there. The quarterly open, that's actually the here. That's the 20 period moving average. Right off that 20 period, right off that quarterly open, and now we got an inside week. So we draw our ranges. How does this inside week break? Very, very clear level there, right? You break above there, you're gonna have a green month, a green week, a green quarter. You're gonna have to be biased to the upside on emerging markets. Then maybe again you start, you add some of those Chinese ADRs back to your watch list, like the Baidus and the Babas of the world, to see if they actually get a bid up. Otherwise, if we break below this past week's low, that will take the month back red again, and then it's just like the Qs, right? So maybe money, if you break below this inside week, maybe money continues to pour out of these former growth stocks, and that's something you need to watch out for. That quarterly open though, that's the level, right? Can that thing get taken out? Right now, buyer stepped up that first time around. See if they defend it if it comes back down here again. 3 more names before we wrap things up. Let's go TLT. Let's talk about the bonds, because bonds have been on everyone's map this past weekend, the past few weeks. And the pivot that we talked about, remember last week, actually a few weeks now, we're talking about it. This level here, the low of Q4. So right there, the pivot was 134.45, saying last week this is likely to get taken out. We got it this past week. The 134.35 got taken out, and we closed right above it. So that was a very, very obvious pivot. That there's going to be stops there. People got stopped out, and then it popped back up again. but the TLT is still in a fairly weak position here. We got a week and a half, as I said many times already, and it's still inside month down. Potentially has a little more room to go, but we do have it going right in the lows. So here, if you're just thinking about shorting bonds now, you're a little bit late to the game, right? So this is not the time to get aggressively short bonds, because it can certainly go further down. There's no question about it. But at this point here, you're shorting into lows. Like, what pivot are you going after at this point that's in the nearby vicinity, correct? So if this thing pops above this past week's high, right, that's going to break the Bollinger Band walk. We've had a really nice Bollinger Band walk for some time now, right? So it's starting this one here. We had a close below the Bollinger Band walk. We had 1, 2, 3, 4, 5, 6, 7 consecutive weeks of closes below the Bollinger Band. This is a classic Bollinger Band walk. You break above that high there, right? That's going to cause short covering. So this is what we're watching very closely now. If we break above that high, it causes short covering that may get people to, again, get back into some of those tech names, maybe some of those emerging market names. So the bond market certainly one to, that's definitely, leading the markets. People are watching it very carefully, and it looks like the bond market is still selling off until you look at the daily chart. You look at the daily chart and you realize, well, on Thursday, it actually ended the session green, even though it closed lower. It's a gap down on Thursday, right? And then they actually closed it green. This is actually a red dog reversal on Thursday, and Friday we have the continuation. So we actually get the Momo down reversal now on Friday, and that would potentially be a short-term, maybe a local bottom here if the lows can hold. If that low holds, this past week's lows, that we have a local bottom, we come out the other end, taking out that pivot high, and we get some more short covering, maybe up to the monthly open for the rest of the month. Okay, so that's what I'm watching very carefully on TLT is how does TLT respond? And that perhaps will be a leading, kind of a leading indicator for us to see if people are willing to get back into some of those tech names. So TLT, watching that one very, very carefully into the coming week. 2 more names. Gold. Here's an interesting chart on gold, and gold here has got a lot of crosswinds. It's not an easy story, as I've been talking about now for a little while. Is that gold unfortunately has broken its strong quarterly trend here, where it had doing a nice Momo up move. This past quarter, we did break to the downside, basically extinguishing that Momo up move once we got that inside bar and down. So it's certainly possible on the longer time frame that gold can head lower, but on a shorter time frame, we do have a situation now where you may have some short covering. So we have a green month right now for the month of March. We're trading back inside of February's range. So just from a macro perspective, here's the thing, right? So if we have bond prices heading downwards, so people are kind of scratching their head thinking, why isn't gold going up, all right? So why isn't gold going up, where if we have an inflationary environment, wouldn't that mean that it looks like, there's a lot of fiscal spending, there's a lot of, there's loose monetary conditions. Doesn't that mean there's possible inflation? Shouldn't gold be working in this environment? Well, there's a lot of stories going out there, but one narrative I think is compelling is look at the US dollar, DXY, if you want to look at that index. Actually, I'll show you that in a second. Lower bond prices means higher yields, and so we actually get a stronger U.S. dollar. So a stronger U.S. dollar is obviously inversely correlated with gold, and this is why we're seeing gold basically heading down as the U.S. dollar heads up. But on the shorter term intermediate time frame chart, we did get a reversal on this weekly chart. So then we had a Bollinger Band walk to the downside in the weekly chart. We finally extinguished it right there. This past week, we got a break above there. I'm actually long of some gold now, and I've been long gold miners as of I think 2 weeks ago. I'm also actually now long of gold, and looking for perhaps some short covering here to maybe get back up into this range once again. And I still think gold, until it repairs those higher time frame charts, that quarterly chart, that monthly chart, I still think there's more downside potential. But I think it's possible we get a short-term bounce. I'm looking for that short-term bounce, but I'll definitely be out of this gold trade, especially if we break below this past, not this week's lows, but this low right there. That'd be the pivot I'm looking for. If we break below this low here, I might even consider taking off that gold trade. But certainly there is my last line in the sand. If you're looking for a short-term bounce, you cannot have this low get taken out. That low gets taken out, again, watch out, you can get lower lower lows. Okay, so that's what I'm looking at for gold. A bit of crosswinds there. Now this is not a trade that's that's lined up with a lot of with time frame alignment, because you do have a red quarter, but you do have you had a green week and you had a green month. So this is one of those things here now where it's being able to hold various perspectives at the same time, where you might have time frame conflict, but this is a shorter term trade looking for a shorter term bounce here now that may get gold back up into this range around here. Okay, so there's your gold. And on the daily chart, this is what I think is interesting here. So clearly we're going to get some sort of resolution. So we're going to get a pop on this coming week. Pretty it'll be quite I'm just going to redraw the ranges. We have a very, very clear pattern that's setting up here now. You have the ranges right there, right? So we had that big outside bar on Thursday, which created the high and low for the prior week. Now we have this pattern, one of our favorites. The double outside and the inside. What does that mean? You have buyers and sellers getting very aggressive on both Wednesday and Thursday, creating higher highs and lower lows on that day and that day, right? So people are getting chopped up in here. You're getting chopped up if you're trading and putting your stops anywhere in the vicinity of the prior bar's highs. So people are getting chopped up here as people are repositioning, trying to get in, trying to get out, or having to get out. And now we have an inside bar. So it's a stalemate. So we really want to be paying attention here now on Monday. How does this thing break? The double outside, inside bar. Because we know there's going to be volatility, because whichever side wins here, let's say it goes inside bar up, anyone who's short down here, like if you're short down here or down here, you're gonna have to cover, right? Because you're gonna be wrong, and they're quickly gonna go after that pivot right there. Vice versa, you break below that low right there, all right? You're gonna break, they're gonna quickly come back through the range here, and then you're gonna have full time frame alignment with the downside again, which is why I want to maybe thinking about keeping my finger on the trigger to get out of that gold trade. But that's what I'm watching for is how does this double outside inside bar get resolved on Monday, because that will be a very, very clear signal on the short-term direction of gold. So this coming week, this is the if you're a buyer, if you're long, this is the worst case scenario for someone who's long like myself, is if it pops, if it all of a sudden just breaks down here and goes out double outside inside bar and down the daily, breaks that low, that's a full time frame line back to the downside again. That's obviously not a good scenario for my long trade. The other scenario is it's a little trickier, is where you actually get a break to the upside, and all of a sudden they come back in and they fade it. So maybe it pops up, hits see that red line? That is the quarterly low, the prior quarter's low. You retest that 1767 area, it fails, or somewhere in that vicinity, comes back to the range again, perhaps creating an outside bar. Would be the more tricky of scenarios, because that's causing buyers to get aggressive to buy the upside. All of a sudden, if they're wrong, it comes back to the range again, creates the outside bar, and that stops out anyone who got long in this area. So that's going to be that's certainly possible. That's the trickier scenario there, and that's something you have to watch out for, because that's what makes trading difficult, right? It's the intra-bar volatility. So this here, right, looks very, very clean. Look, it's Momo up, inside bar. You look for the continuation move. You buy this, right? Look what happened. You were up a little bit, went up to there, got that pivot high. If you recall, I talked about that a few weeks back. But then all of a sudden it comes back through the range again, stopping everyone out, and then coming out the other end, right? So taking out these lows. That's certainly possible, and that's something you got to watch out for. If if you analyze price action enough, you can understand the scenarios and how you want to manage your trades. If this happens, I'll be getting out of that trade. So that's what I'm looking for the gold markets for now. A short-term bias to the upside here until that level gets taken out. Finally, Bitcoin, man, this thing is rallying in the face of any macro news. It just seems like now that it is a long volatility play. If you want returns, if you want volatility, these are the markets you want to be trading. Even though Bitcoin's, for the most part, it has been kind of muted this week, it's holding its gains. So what can you say about Bitcoin other than that? You hit an all-time high there of 61,699, and now on the week you have this scenario. Okay, you have an inside week. So let's redraw our ranges right there, and if you get a break above this past week's highs, wow, you're going back to all-time highs again, because that just shows you the strength of these markets. If you can break above this week, and it'll probably keep on going. If you do break below this low, though, watch out, right? Because then you're gonna get some short-term, some selling. Maybe some sellers come in here. Maybe break it back down to the monthly open here again. But for now, it's inside bar up, inside bar. So if you're long of this, you have to watch out for that inside bar reversal, short to the downside. That will cause these longs to get stopped out. Okay, so that's what you need to watch out for. But if you break above this high here, yeah, you're gonna get some higher highs. Ethereum looking like a very similar chart. So ETH/USD. Basically the exact same pattern. So Ethereum USD and Bitcoin USD have had a pretty quiet week, and that's because we got an inside bar. Exact same pattern. Inside bar up, inside bar consolidation here now. Which way does this thing break? To the upside. If it breaks to the upside, you're going back to all-time highs. Highs right now 2036. I think a lot of people are calling for Ethereum 3000. Very reasonable. If you can break above this high here now and stay above that high, we can get that rise to the back to the Bollinger Band highs up here. Now notice, we had that Bollinger Band walk on Ethereum. This is why I pay attention to the Bollinger Band walks, and I call them out in these videos because they're very informative. Look, when you get a Bollinger Band walk like this, again, I hope after watching these videos, these things begin to burn into your psyche. This is going into highs, and this is when you have to be very careful when you buy, because any kind of dip will cause it to come back significantly, right? So you have a Bollinger Band walk gets extinguished if that low gets taken out, and that happened. Remember, I think it was a few weeks ago now. Yeah, the third week of February, actually last week of February, and you get that ripping move to the downside. That was at that point a 26% down move on Ethereum, quite significant, but you can get repaired quite quickly. Look where it found support. On that monthly open, we had a fresh month, then went inside bar up. Now we've got a big consolidation. Which way do they break this coming week? Something to watch for. All right, so two more charts just to give you a lay of the land. Actually, let's just do one more chart because the video is going a bit long today. So here's an index I like to watch. The shit perp index shows you all the altcoins, and this thing is going gangbusters. So this is this thing has been really rallying, and look at the monthly chart. It's a Momo up move, and the ranges are getting wider and wider. So this is getting extended now. Now we see that it's going right into Bollinger Bands, right? It's doing the Bollinger Band walk, and just based on what we've said in this video, you need to watch out here because it's now up to the buyers to keep up the buying pressure. If you cannot keep up the buying pressure, keep this thing going, you break below that low, 6,014, you're coming back in. I'm not calling for a complete, crash if that low gets taken out, but certainly you got to watch out that it doesn't come back, that it's going to come back in, and that means when you buy on the highs, you have to watch out for potential corrections that could be of good magnitude. So that means if you're chasing, right, you got the FOMO, and you're extending yourself, and you have poor trade location, it doesn't take much for, like we've seen in this video already, one bar to basically wipe out all those gains. So this is a situation now where I prefer to wait out to add on to any kind of altcoin exposure. Or if I'm going to be adding, I'm going to be keeping a very short leash on that trade and not trying to hold this thing based upon this trade location, because you could buy and get proven wrong very quickly, and it may take some time before that chart gets repaired. All right, so that's the final chart for this week. So we covered a lot of stuff this week. Once again, I'll just reiterate: keep your eyes on that on those major time frames, right? So the markets are especially on the cryptos fronts are slowly melting upwards. I don't think we've hit those tops yet now because I don't think we've had the retail participation yet. And on the equity side, it's trickier. You have a divergence now between the Qs and the rest of the indices, and the name of the game is to watch the bonds. The bonds are really signaling where traders are paying their attention and where the potential risks lie. All right, well, that's a wrap for this week's video. I hope you found it useful. As always, you can find me at thetradingedge.org. If you have any comments, drop me a line there or in the YouTube comment section. If you enjoy these videos, you want to see more of them, hit the subscribe button, hit the like button. That gives me some feedback. If you have anything you want me to add to the analysis, or if you have any questions, again, you know where to find me. And hope you have a good trading week. You got a week and a half left for the month of March. It's been a wild year so far. A lot more of a year to go, so a lot more stuff to talk about in the coming weeks. All the best and happy trading.